All right, welcome back to another Exit Liquidity Live. And there he is.
Oh,
There he is. He's
he's
got his
coming in.
food.
Someone's coming in. There he is.
We got Scrooge
Alignment.
That
McDuck.
is hilarious. First it was bricks, brick Fabio, and now it's office Fabio.
Oh, do we have floating head again?
Yeah, floating head. Floating head.
I got. Okay. It's not very good. Alignment. I got to realign this thing. I haven't been able to play with it. I have food, so I'm going to be consuming it.
Well, at least you're not consuming it in the executive bathroom.
Oh, this is the executive bathroom.
Oh, wait, is it?
It is?
Yeah. Oh,
For
yeah,
some
that is
reason,
the executive bathroom.
this camera has like a green bias. Like, there's not like the color, but it's just like saying, nope, you're going to be that color. Let me see if it's because.
What type of wizardry is this?
What is this?
Let me see this. Oh, just changing the colors. Okay, now it's just correcting and making me. Okay, this is me more normal.
All right.
But still
You are good.
And I'm making it a warm color. That's what I've...
Even with you being Scrooge.
Oh, you make it yellow or whatever, make it warm.
Yeah,
and
so I'm like, all right,
messed
fine.
up.
And now let me change the keep talking. I'm having technical difficulties.
Yeah, we got this. We got this. So,
As scuffed as this live stream is,
I'd ask how you guys are doing, but we know how Fabio is doing. He's just, he's doing his thing right now. But how's it going, Bacon?
Mixed bag. Weather's still miserable, but at least
How's it feel to have shitty weather?
Yeah.
Not great, Bob.
How's it feel?
I will say this much though, like there is a give and take because like if I were down where you live, Fabio, I imagine the bugs would be more of a pain in the neck, especially during. Oh yeah, that's right, because you're a city slicker, so yeah,
So,
you don't.
So it's
you don't
bad.
Yeah,
it's bad, but is it this bad?
No, it is not. Anytime you don't get margin called, that's a good thing.
All right. I just had to throw that in there for fun. It's
so fun because like it keeps closing higher than the yesterday's previous close. Like
that's
last
great.
I checked, it did it again today. Like and it looked like it was below it for most of the day. I was like, oh,
it just keeps on going.
Yeah.
All right. Man. The real question is, when are you shorting Bacon?
I'm not. Wait, hold on. What prompted this? Because Andrew asked me the exact same damned question with the exact same stock.
Well, because we know you're hedging Crocs with NVIDIA short.
What? I know I'm on the record of being dumb, but I'm not that dumb.
I apologize to all the audience that I will consume in front of you. Kiwi Sam's just like putting his hands here. He's like,
yeah,
again.
Gotcha.
Oh man! So did anybody listen to Netflix earnings? Because I did not.
Yeah,
I got the highlights, but did not listen to it.
I was occupied, so I'm waiting for the recording to be out.
Yeah, beat top line, strong guidance, and membership grew? Question mark.
Mm-hmm.
Yeah.
Advertisers like their advertising tier and are really attracted. So even stronger guidance than that.
Their Q1 guidance was actually pretty good. So they kicked out like 12% growth, about 12.5 in Q4, and they're targeting like 13.2. So they're seeing a nice recovery and re-acceleration in growth. So it's pretty nice. And then streaming subs increase, I think, 12.8. So doing pretty good.
Shout out to Lou Gator's comment, Fabio, that your camera sometimes makes you look more yellow than I am, and I'm Asian. It's amazing what lighting will do.
It's called sunburst.
I'm culturally appropriating. That's all.
Everyone cancel this man.
I'm yellow facing. You caught me.
So once again, apparently Netflix now continues to not be trash, as we have seen.
Yes.
Which
Moment
man,
of silence for Bill Ackman.
Yeah.
R.I.P. buddy. R.I.P.
I think for whatever reason he's got other high profile things that he's worried about.
Has Carlson released a video yet? I figured he would be the first one. Like,
He annoys me
wow, let's
with
go.
that. He annoys me with that because he was totally the guy that's like, was just his face. Do you remember the video I made where I show you the progression of his face talking about Netflix and went from like, Netflix is extremely bullish. I'm so bullish. And he went from like over time, just going like, yeah, there's just so much wrong with the business. I don't know, guy.
Oh, that was wild, man. That was wild.
I still think that he looks like a younger Michael Cusack. Was it Michael Cusack? I'm losing my my actors. Yeah, it's Michael Cusack. Yeah.
Wow. What's the performance since the bottom?
Since the bottom, I think it's like 170%.
That's around my cost base.
Or no, not Cusack. Shoot.
180. 180 from the bottom. Actually, I think intraday bottom was like 165. So maybe it was like
I didn't get that price,
but yeah, man, that was wild. But man, still so many regrets for that one, man. Yeah. So many regrets. I think I had it at like 180, 180-ish. Got out of it. Dang me. But at least I didn't do that. So hey, you win some, you lose some. Or in Paul's case, you just lose a lot.
Oh yeah, he's down 65,000 today, right?
Yeah, today. Netflix only went up like 0.5%, or not Netflix, but Nvidia only went up like 0.5%. So,
oh my,
is what it
God.
Is. That's just insane. Oh my gosh. But no, so now Fabio, you probably did a lot more DD into Netflix and kind of that industry in general. I did not realize that, well, maybe I'm just late to the party of realizing that YouTube is basically pushing more revenue than Netflix. Mm-hmm. That's wild.
Mm-hmm.
That's crazy.
Yeah.
Because I was looking at, for kicks, I started re-looking into Google, looking at YouTube specifically. And like their YouTube ads section is not all of their YouTube revenue. Like most of the growth in Google Other is from YouTube Premium. So they're probably pushing about 10 billion now in quarterly YouTube income, or income, but revenue.
Notice their actions. Their actions are currently very reminiscent of trying to push individuals to YouTube Premium. So taking action now against adverse watchers or viewers that are downloading software that can help remove ads. Yep. Google, I don't think they're done with. They're going to escalate the war against ad block on YouTube. And then what ends up happening is if there's some individual, it's going to hurt content creators for some respect. For example, if you're a content creator that has like a whole separate kind of thing and you generate revenue from that, whether it be like some sort of, I don't know, Patreon or anything like that, it's going to hurt you if there is that viewer that's willing to give you money, but isn't willing to give YouTube money and also doesn't want to watch ads. Maybe they stop, but I don't think that's going to happen. I think they're just going to suck it up because there's nothing better. What are you going to do? Go to Rumble?
And what for like content creators, there's multiple avenues of monetization now, right? There's super chats, there's store merch built in basically. I think you can even like sell memberships on YouTube to the community. Like there's so many random things that you can just push out there. So like ad monetization, I'm sure is nice. You make a little bit here and there, but I don't know. I've been seeing the split between YouTube ad revenue versus premium, YouTube premium revenue. from a creator standpoint is kind of interesting because it's very, very low compared to ad revenue, at least for me. I don't know about you.
Do you watch it on a per viewership, like how much you make on a per viewership for ads and premium? Because it's more if a premium viewer watches.
Oh, on a per viewership. No, I haven't watched that or seen that.
If more premium viewers watch, you make more.
Huh. That's interesting.
I can tell you, for us, the breakdown is likely that we have less premium viewers watching us.
Yeah. Well, and it's also interesting because you look at just Google's financials, and you would expect that as they're pushing more of their viewership base towards premium, that you might see like a regression or a slowdown in ad revenue, right? I mean, that ad revenue is also going to be heavily dependent on the ad market, but it seems like it hasn't taken too much of a hit. I mean, it's still actually growing for YouTube ads. So it's kind of, I don't know. It's interesting. I don't think as I was just thinking about it, I was realizing how much I liked the kind of revenue model of YouTube, like from a content creation / viewership perspective. Because literally they don't have to pay to create any content at all, right? All they do is basically, fine tune the YouTube algorithm and get their recommendation engine firing as good as it can and monetize people's time. That's all they do. They don't have to worry about film budgets or anything. And I hope that they don't get into that.
There is one thing. They have to keep expanding storage constantly.
Yeah.
So tons of spending there, but it's
I'm less concerned about that just because of Google Cloud. They have the scalability to do that pretty easily. It's that's nothing new for them. But it would be interesting to see if there's a time where they put some type of limitations on storage for creators, depending on how many views you get or the popularity of your content. I don't know if it'd be worth it because all in all, storage can be pretty cheap-ish. I guess it really depends on when you're talking hundreds of thousands of terabits, probably not. But on a per video basis, I would think that storage is relatively cheap. Now compute costs can suck. But luckily we're not looking at any type of I would say heavy CPU utilization compute environment. It's more going to be just storage and feed delivery, right?
Yeah. And like you just said, they have Google Cloud, which something that sadly, when you were just speaking about Netflix, does not
have.
Yep.
And Netflix uses either Azure or AWS.
I think Netflix uses AWS.
Yeah.
I think so.
Hell yeah.
But there's one thing though, a possible additional revenue stream that YouTube could tap into, or Alphabet by extension. And that would be, say you're a finance YouTuber, you have a whole bunch of awful takes. You would think, oh, I could just delete the video, and YouTube would actually incentivize this behavior because it lessens the storage demands. No. YouTube charges them to remove the video. It'll be called the Grifters Package.
The Grifters Package.
Yeah?
My only pushback to that would be we got to be careful who at YouTube is in charge of that. What you might end up having is oh, me Kevin's fine, but I don't know, arbitrarily just picking on people who talk bad about me Kevin because me Kevin's a big moneymaker for them. Imagine them saying Strongman doesn't wear a shirt.
Yeah.
So he has to delete his video, and we're gonna charge him for it.
Oh no! Strongman could leave his videos up. It would be more of a
if you're in charge,
yeah. It'd be more of a make a bad take, have the video up, and I want to remove it. YouTube's okay, money please.
Oh, charge to remove it.
Yeah.
Oh,
yeah, yep.
I misunderstood you.
Yeah,
I
yeah.
misunderstood you. Oh, okay.
Yeah, like imagine you pump a SoFi, and years from now it doesn't pan out. You know?
Do you think now? So this is something that I've thought about. Is like some of these larger creators eventually getting deals with Hulu or Netflix or something like that to put their content on there. But I feel like YouTube is such a mix of content and social media that it wouldn't have the same impact. And like I would almost be more worried about like I don't know, like a Twitch competitor or something like that, for the stealing of the content creators or like the personalities from YouTube, because I mean, I could see them doing, like Mr. Beast doing like a 20-minute video and having it exclusively on Disney or like Hulu or whatever, but I just don't know if that would be. I don't think it would have the reach and the impact and the community growth that YouTube would have.
Well, yeah. I was gonna say, like, I don't think there's a shot, because YouTube, Mr. Beast, for the most part, I don't even think would you be willing to even entertain something like that, because for him it's all about reach, and then the way he eventually will make all of his actual profit is from every adjacent business that he develops on top of that. And Mr. Beast itself is, think of it like a marketing arm for his other businesses. Yep. And in that ways, it serves its purpose to getting in front of the largest audience possible.
Yep.
If he were to do that, he would be minimizing his audience and then therefore minimizing his total outreach possible to his other businesses. But that being said, there is there's a lot of this content that works in this amateur setting that doesn't work in this professional setting.
Yeah.
Like if you look at Mr. Beast's shows, while they are professionally done from the standards of a YouTuber, they are not professionally done from the standards of what a CBS would put out, owned by Disney, which loses a bit of its charm entirely. And there's things that these older dinosaurs wouldn't be able to get in their head to adjust for that amateur taste.
Yeah,
that again is part of the charm of YouTube.
Yeah,
Well,
which is
I was gonna say a big draw that I have to like some of these channels on YouTube is just like it's way more personable, right? Like you get to know like actually the people behind the camera, and it creates like a more realistic like viewer creator relationship, and you would never get that on any type of like actually produced show.
Well, that's your prerogative. And I am deliberately misusing the word prerogative.
Your prerogative?
Yes. Yes. To the comment section, if someone is losing a debate and they're using polysyllabic words and using them in the horrible way possible, like completely incorrect, they're probably like wrong. Just trying to make themselves seem smarter than they actually are. But oh well.
So wait, so is his prerogative, is Strongman's prerogative just not to have people grift people? Like
like the word opinion is polysyllabic, and that would have been befitting the Tanner context. Future Invest Tanner is a reference, and instead he kept saying the word prerogative, and prerogative would be like, well, the government has a prerogative to do this XYZ regulation. Like that is a privilege, that is a right, not an opinion. The two are not the same. Oh well, whatever.
I mean, technically, you could say that Strongman has a prerogative for all the grifters to grift as hard as possible, so he can make more content about grifting and make more money from the grifters grifting.
I would say that would be an incentive. But
Jesse, that is your exclusive privilege. Yeah.
Yes.
Exactly. So speaking of, since this came up, we might as well just go there right now.
I was gonna say we're gonna.
Yeah, let's just hit it. Like, now, do we want to talk about analysts first, or do we want to go straight into YouTube stock? Like, I don't know.
Well,
personalities.
I wouldn't offend analysts by comparing them to the same as these.
I'm not trying to. I'm not.
But I'm gonna do it in some way. I'm gonna say people are finding comfort in these like proto analysts, or well, let's just say like the age is a neo analyst. So these new analysts,
these amateur analysts.
I'm not saying amateur, but
well, I mean, would CNBC
also, let's just get this straight. Financial advisor has nothing to do with equity research.
Yeah, you are a better salesperson, basically.
Just because you are a financial advisor doesn't mean you know squat diddly about equity research at all. So let's just.
I remember when I first found that out. I was really young, and I thought financial advisors knew. Some do, but it's like you do the research on your own. The profession doesn't make you proficient.
Nope.
You can definitely find a financial advisor that is, but the profession itself doesn't require proficiency in equity research.
Nope.
So
exactly.
Yeah, if a financial advisor utilizes their profession as a logical fallacy argument from authority to try to convince you that they are therefore qualified to then because of that, not because their argument is sound, etc. They use their profession, again, using an argument from authority to make that point, then I would question everything they have to say after that.
Yes.
I am, and by the way, I would also add to that and say, anytime someone uses argument from authority for anything, I would immediately question what they have to say next. I would say, I am right because of this. If they make their point clearly and concisely and they have reasons for it, and then on top of that, they say, Fabio, by the way, in addition, like I've already made my point. They don't have to say in addition to, but they say also, I am X profession that has worked this many years, because that's not where their point stands. You get what I'm saying? Their point doesn't stand on the professional work they do. They have this whole argument that they laid forth, and they're not saying this is the answer because I am. Because that's what we want to be careful of.
Yeah, because I've been to a fair amount of job fairs, and I've been lucky that financial advisors have been candid enough to say, yeah, majority of the time my job is sales. It's customer facing just about all the time. Like I'm not researching or pushing necessarily like products, be it like any sort of fund or what have you. It's more of a hey, I want to try and secure this client's business or customer's business, and I want to make sure that I keep said customer's business. Like that's it.
You want to talk to them.
Yeah.
So one of the things that I've noticed the most about people like arguing their ability to pick stocks or analyze things, a lot of them are like, well, I was an entrepreneur and I created this business and I sold it or something like that. So like I know what I'm doing. And
I think you're talking about a very specific person now.
Yeah.
No, I think there's multiple. Like there's multiple people that have like come into lots of money. There's obviously the guy with 8 businesses upstairs, but there's other people that have like, yeah, they'll have a successful business and they'll cash it out and they'll have a big pile of money. But just because they have a big pile of money in their brokerage account doesn't mean they got that money from actually being a good investor in the equity markets. They were able to do something very, very well and build it and, get a liquidity, like, influx from it and a liquidity event from it. Yeah, they got their exit liquidity. But just because somebody has, if somebody has 30 million in their brokerage account, that doesn't mean squat. Like, okay, did they build that from, a couple million through investing, or was it a one-time event and they just have a fat brokerage account?
Is it replica? Can it be replicated again and again and again?
Exactly. Right.
Yeah.
So
that was actually one of the arguments levied by some of the audience members in the debate last night. They said, "Don't worry." Should we say the name? Do we drop names?
I already did.
Oh, okay. So
go for it.
don't worry,
Yeah.
Tanner. I have over $100,000, and I think you're right. Like, that was repeated several times, and I think TJ the Wheel Deal, another guy who has, I think, several million, almost felt like you were referencing them or the crypto guy, or it could be whoever. Yeah, you're right. There's a lot of people like that.
Yeah. I was specifically thinking of one guy, but I wasn't thinking about the wheel guy. But I just come across, like, it seems like they just pop up, and it's like, okay, well, like, how did you actually get that much money in your brokerage? Was it actually from good investing, or was it from, your job or selling a business, and now you're like bored and you're like, oh, well, I'm gonna, yield max on YouTube.
Oh yeah, you are talking about that guy.
Yeah. Right. Oh man.
Yeah.
But no, the other thing that I found pretty interesting about that debate is, like, okay, so, like, what the heck does 100K have to do with anything? At
Oh,
first
yes,
point,
that's a great
right?
point. Yep.
What does that have to do with anything? Like, shut up. I don't care about how much you have in your account, whether it's like 10 bucks or like 20 million. Like, all it is asset allocation. Like, come on. So even if you have a super small account, like, really, the discussion should be like, okay, well, based off of all of these factors and, these different scenarios that might play out, like, what type of risk are you willing to take on for that investment, and how is that risk translated into your asset allocation of actually buying the investment? That wasn't brought up at all. I don't know where 100K came from. Like, okay, cool, like, you have 100K, but, like, that doesn't mean squat.
Yeah.
100.
Yes, exactly. Oh, I have a 100K portfolio. It's 100% allocated to SoFi.
Yeah, no, exactly. I have
Therefore,
100K, so I can go YOLO into SoFi OTM calls.
you know who also uses that risk, that logic, by the way?
Who?
U.S. regulators. Oh, yeah.
Accredited investors, baby.
Accredited investors, or the more famous one for day traders, $25,000. Therefore, if you have less than $25,000, it's too risky for you to day trade. You can't possibly be bothered with doing day trading. It's too risky.
Yeah.
But as soon as you have over $25,000, now it's less risky. Now it's okay.
You can be stupid.
Like, dear God, like, sometimes rules are so silly. And so that same logic is used in US regulation for protection of consumers. It's like, all right, I have $100 million. Now day trading is not risky at all. I'm going to day trade 100 million.
Yes.
Well, what happens is you get 100 million, and then you short Nvidia, and you lose a bit.
You short Nvidia and you lose. How much is it? 7 million?
So
that's
my conservative.
Range, right?
That's assuming he only sold 300 contracts at 300 strike, right? If he established that position in, like, January, right? Because that assumes that he established a position in, like, April, May, I think. The entire position. If he did it in, like, January, he could be, double that.
May I ask you, what was the premium he got?
It was about, well, let's pull it up.
Trying to think. In the moment, he must have thought, wow, I just made someone's salary.
So here's the crazy thing is that, let's see. Let's do the crazy thing is that it sounds like he rolled his June contracts to December. So if he did this entire thing in the June contracts, at a $300 strike, he might have been only getting like a $25-$30 premium, right? if he did this at the beginning of the year. I gave him the benefit of the doubt and just did the calculation based off of the December contracts, which came available in about April, right? Yeah. So I gave him the benefit of the doubt and was like, okay, like let's assume he got $80 premium or so, or $80 per contract, which would be 80 times 100, so 8,000 per contract, I think. And that boils down to about, 2 million. He says several $1 million upside, right? Which is all premium harvest. Like if that's his upside and it's a naked call, like it's a sold naked call, like it's all premium harvest.
Did he say he made several million in the premium?
No, he said his max upside was several million.
Wait, so from that, I think that would tell us his loss is way higher right now.
Yes, that is why I keep urging every time this gets mentioned.
7 million you're being very conservative then.
Yes,
I'm being very conservative, right? Yeah. So because I'm basically saying that, you know what, he got about $80 premium, $80 or $100 premium, best case scenario, which he could have only gotten a $30, $20 premium. So like, this is like, in my mind, I'm like, okay, maybe he scaled in, maybe he, sold some after the pop and stuff like that and got more premium. Like let's just say an average of $80 to $100 premium. He would need about 300 contracts to get about 2 million in premium harvest or total upside, right? So if they expired worthless, he'd be up about 2 mil. It could, if he like premium harvested 3 million and did this in January, February, he could be down 15, 20 million right
now. Based off of his context and like the breadcrumbs that other people have pointed out, it seems like he's been margin called multiple times. So.
Yeah, because if we look at the June contracts, right? Yeah, you were only getting about 30, 40 bucks, 50 bucks in premium in January, February, right?
Could you imagine like saying that, hey, I know that this is wrong, this is dumb, because he has been on record saying that, but he's still insists on going down with the ship.
I just realized something. His argument for why he can't show his portfolio makes sense under the given context. It's a family fund. It's not even his money.
Nope.
And so of course, like for example, that would be the case. Like imagine if my son came to me. It's like, hey dad, I started a YouTube channel and I know like, you have all this money set up for me and stuff and it's all in like the family portfolio. Can I show my portfolio and show all the, money we have and just profit off of this and grow an audience and show them this portfolio? I'd be like, absolutely the fuck not. Part of my friend. I'd be like, no, you can't do that. In this case, it might be a little different because his dad and me in this metaphor, I have like a YouTube presence, so I'd understand, but like still probably be like, about it. Point is, like he said it was like lawyers who said, and I'm like, I'm thinking he asked his dad, and his dad was like, absolutely not.
His dad
so he's like, my lawyer said I can't do it. I'm like, what do you mean? I think you just don't want to say that dad said no.
Yeah.
That's the community poll that we need is do you trust the trust fund baby?
No.
In his case,
never.
No.
That is the one thing about being a trust fund baby like Paul is, because he hasn't sometimes trust fund babies, they can never escape, right? Because it's almost like its own prison inside of it, especially like if they don't amount and create their own wealth, they remain in that prison. And sometimes the trust fund baby has the lack of appetite to become a high achiever on their own, because they could just be a little bit lazier and things will be all right. Maslow's hierarchy of needs, they're good for at least the first several layers. And then in his case, he's good for most of the layers and he's trying to now just get recognition. That's what he cares about the most. He cares about feeling like he's the smartest guy, feeling like he's making an impact on the world, and people all are appreciating how smart he is and rejoicing in his genius. That's what he's looking for. He's literally the Joker meme. It's not about the money.
It's not about the money, man.
he's also the other Joker, which is, how about another joke, Murray?
How about another joke,
God.
Murray? Yeah, he is.
Yeah, it is pretty interesting to look at the mentality of people that are in a position or grow up in a position that don't necessarily have to worry as much about money, and how that affects their mindset on kind of taking risk.
To me, it's just baffling though. Like, out of all the things that you choose to go with, he chooses one that he's not even really passionate about. Like we like to look at companies for fun. Like, as weird as that is, or as strange, possibly sad as it is. But like, he could have done literally anything else. He could have picked up photography. He could have liked hiking, or going camping. He could have
Dude, he's too cocky for that, man.
He could have like painting, like photography, like anything. And instead, it's like, no. This is where I plant my flag.
I will be Buffett.
He is.
It's like, bro, like, you could do anything. You could have gone into woodworking, like make some spoons. I don't know.
And it was funny because that super investor, not super investor, but that professional fund manager, I don't think he's considered a super investor yet. Actually entertained him because he's an investor or his family's an investor in the guy's fund. So imagine having to, like, you have to,
Yes.
Yeah.
I don't know. I was. Did you guys watch their interview with Oswath?
Yeah, I did.
Demoterin?
Yeah. I'm so glad that they didn't edit everything out.
I watched pieces.
Yeah.
I like. He would be like talking, and they'd be like, "Oh,
yeah."
I'm like,
simple.
Oh my god.
You can have a simple process, but don't have it be simplistic.
Yeah.
Oh, so you like PE? Oh, well, so you price them, you don't value them. Oh. Good God.
Oh my gosh, that was funny.
What was the name of the fund manager, by the way? Because Fuhat's asking, I forget his name.
Gary Mashurs.
Gary Mashurs.
Gary Mashurs.
Yeah, don't ask me to spell the last name. I will butcher it. I think it's like Mishurs, maybe. But yeah, that's my attempt. It's almost certainly wrong. So there's that.
Let's see. Let's go into analysts now, I guess.
Oh yeah.
Because we've talked about YouTube degenerates and YouTube finance personalities and their analysis and whatnot. How do you guys feel about analyst coverage?
I'll defer to Fabio first. I do want to say my piece.
I think analyst coverage should be taken with a grain of salt, because just like how there are full-on degenerates in the amateur world, passionate degenerates, there can also be found a lot of quality in the amateur world, and in the professional world, people whose job it is to dedicate themselves to a particular company or set of companies. We must also kind of understand that there's going to be a talent pool associated with that. Good and bad people work in this field. And so you're going to have some really good analysts, some really bad analysts, some analysts that absolutely have no interest in the company that they've been given, but they're a junior analyst and they're going to get the uninteresting company that no one wants to talk about. And it's going to show in their work. And a lot of times you can also have the analyst that's burnt out and is just trend following what his other peers are doing. So similar how all of you work in some job, you can probably point to people in your job that they are not pulling their weight. They're not doing as much work as maybe you are. Maybe you're one of those people. I don't know. Were you listening? And then you're just like, yeah, I'm just mooching and getting my paycheck and investing. That's what I'm doing. But realistically, there's people like that in every profession. And so I'd say it's not I dismiss all analysts completely, but I don't take their word as fact. And it should be looked at it with a frame of nuance. So yeah.
All right. My take on analysts is Fabio is diplomatic. And if it weren't for Fabio, I would probably default into that with a little bit extra punch. My extra punch would be some analysts, not all to be fair, but some may have the reputation of their employers setting up to be a pump and dump, so to speak, in a polite way, or not as polite way. But the other one though is that they can't necessarily be ignored. Like some analysts legitimately will move the needle. It would appear that there's correlation to an analyst revising their predictions and it moving the stock. If you are an investor, speculator, or trader, you probably should be aware of this. You probably should at least care a little, maybe. And it does cut both ways. I don't know people's time frames. I don't know people's methodologies, but it is something to be aware of, to respect them insofar as that much. But when it comes to doing any sort of research, I wouldn't use them as a crutch. Like, it's okay to like have some that you respect, but all of them, love them, like, probably not.
So I think sometimes they can, like, they have their place, right?
Yeah. Oh, yeah.
You can always look at analyst research just to see like maybe how they're viewing things. It doesn't mean you have to agree with them, and I think mostly you probably should not agree with them.
Yeah.
You should be trying to do your own analysis, your own research, trying to take in the various information and like establish, your viewpoint of what is most likely going to happen in the future, and not rely on them heavily at all. I linked some educational papers in the description of, basically research to show, how accurate analysts usually are. And so there's 3 that I linked. We might look at 2 for a little bit, but in general, it kind of boils down to like, analysts as an aggregate don't have much edge over just kind of random modeling over the long term. So it's, and you got to be, I don't want to diss people because I just don't like doing that. But I've always wondered if an analyst is really that good, then why are they an analyst? Or why is their viewpoint being shared publicly? Because if you're really that good at being able to project things potentially, like, I don't know, like, seems like there's a lot of money to be made there, but I also don't know the industry. I don't know, like, I don't know. It maybe I'm a little bit too skeptical. But I don't know. Do you guys have any thoughts on that?
I'd say you're onto something right there, because that is how the industry works. So like a bank analysts, their work is published freely because it does benefit the bank's internal clients if they had already published the research to their clients ahead of time. And so it just promotes the stocks that they've already advised their clients on, which would in turn make their clients money, make the bank look better, etc.
Yes.
And you're exactly your point. The best analysts are probably able to command a very hefty premium for their service, just like in any profession. If you're really good at what you do, you're gonna be wealthy. I think that's about almost any profession. If you're really good at that profession, I don't care what it is, you're going to be rich. It's just about being able to accurately market yourself and monetize that skill set.
Yeah.
It doesn't matter really what you get into.
Yeah. And it does kind of go back to like, if you have discovered what you believe is like a very, very amazing opportunity in the market, I would think that you would want to give yourself time to establish the exposure with either yourself or the firm or whoever you are working with before you let everybody know about the gem that you found. So it makes me skeptical of like, you know, when analysts update price targets, and I think there's a lot of following in that realm, just of overall analysts. There's just a lot of like momentum following, like, oh, well, it hit that, you know, everything's looking pretty good. Well, let's raise the price target. Oh, everything's falling. Yeah, it doesn't look as good. Let's lower the price target. It just seems like you see that like all the time. And I mean, I don't pay attention to it much, but I do get like notifications on, you know, analyst upgrades, downgrades on different things that I watch. And it just seems like half the time they're just following momentum. And I don't know if that's true, but man, it's just half the time it seems like it's just following the trend of the stock. Yeah, but I did find, let's see, let's go through a couple of things here. So this one is from, I believe, Notre Dame, and basically, to summarize what they found, they were pretty much looking at analysts' EPS forecasts compared to oh gosh, what's it called? What's the model called? Random walk models, right? And oh, you're smiling there, Fabio. Do you want to tell us what a random walk model is?
No. We won't get into it. Just finish the. Yeah.
All right. So in essence, I've tried to like look into like, okay, what exactly is a random walk model, just to understand it a little bit better. And what I've come to the conclusion of is that, if I'm understanding it correctly, a random walk model is usually looking at previous historical trends of the equity, and then doing like a random step sequence with a varying degree of the historical trend to go ahead.
You could explain this in one of my favorite phrases, but
do it.
Winners
keep winning.
Keep
on winning.
Losers. Only losers average into losers.
There you go.
Which it is, right? It's a trending, right? It's a trending model. So it just takes historical data, extrapolates that out. It says basically we could take random steps down or up, but eventually it's going to regress to previous trend.
Winners keep on winning.
Yes. So what it found, or what they found, is that analysts are most accurate on a quarterly basis. Once you get past a year, randomization, like random walk models, become more accurate than analysts. Once you get out to 2 years and to 5 years, that deviation is even greater. So analysts, what that tells me is that, like, okay, well, yeah, if you're an analyst, you should be able to be accurate when you have guidance from management, right? Like, the guidance from management, if management is doing their job well, is going to be somewhat in line over the next quarter, 2 quarters, 3 quarters. But you have a greater variable going forward as you get to a year, 2, 3, 4, 5 years out. So the further that you get out on analyst estimates, the more and more incorrect they become, especially when in comparison just to random walk models or winners keep winning models. The other thing that I thought was pretty interesting, and this was the second paper that I pulled up, and this study specifically looked at analyst EPS estimates over a 12-month period, so 1 year forecasts over all global equities. And it's linked in the description. You can go down into like regions and all that type of stuff if you want to get more into the details of the paper. But it found that on average, analyst consensus estimates, EPS estimates, overshot by 25.3% over the last 12-year period. And this was done, I think, 2016 or 2019. So over the last 12 years, on average, analysts overshot EPS estimates by 25% on a consensus basis.
That makes sense to me, because if you have an optimistic tilt on most of the equities you cover, and we know that most returns of the stock market happen in a minority of stocks over an extended period of time, I would expect, again, assuming there's an optimistic tilt, that on average, they're going to overshoot than undershoot, because most stocks are going to perform terribly or poorly.
Yep.
And that would imply that the businesses of those are deteriorating. So their optimistic tilt, they're going to be basically missing guidance, missing. So every time, you get that Seeking Alpha notification or whatever app you use for when the earnings come up and it comes up on your phone and it's like, blah, 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 misses, blah, blah, that's more often than not. Yeah, that makes sense.
So what we've learned from this is winners keep winning.
Winners keep winning philosophy
Memers keep
seems to be
memeing.
actually more accurate than analysts. So someone was onto something, though.
Yeah. Yep.
And losers keep losing. Someone was onto something.
Hey, you know what? I mean,
can we name the person by name?
Kingdom. Shout out my previous exit liquidity man.
Wait.
Godspeed. No, but like it is funny. I think there's I think that like kind of what this shows me is that, for one, like I never really want to seriously take into account analyst estimates as far as projecting future earnings as like gospel, right? They're most likely going to be wrong. Like, what I want to rely on more is just my business and conviction in my conviction in the business and the industry and the tailwinds or the headwinds that I think they could see over the next 1, 2, 3, 5 years, and how to play that. I think like analysts can provide great information as far as business structures, maybe moats, competitive advantages or disadvantages. Analyst reports can be good, but like there's a lot more that needs to happen for you to have a sound investment thesis off of that, right? That should be almost like you come up with your own thesis from your own understandings and your own research of digging into the business and to the industry. And then analysts might be an ancillary, like, oh yeah, okay, that's interesting. Yeah, I agree with that point. I don't agree with that point. Because it seems like most of the time, your edge in the market is usually when you're in disagreement with the market and you're right. Eventually, if you are right, and you're able to, allocate accordingly, you're going to be rewarded for that once things come back around.
Further point from, the advantage that investors have, individual investors, retail investors, is that the profession of an analyst, typically the institutions that they work for are operating on the short-term mentality, short-term basis. So projections and performance incentives make it so that everyone is focused on the performance within a 1-year time frame. So the accuracy is focused on a 1-year time frame. So therefore, the recommendation is going to be as chaotic as one might expect, given the incentives. So give me the incentives, I'll show you the outcomes. So what we see in the industry is exactly typical of that. So going into like, okay, momentum chasing, momentum following. I think in the case of a world where we focus more so on the short term, and I'm talking again from an institutional standpoint, then the momentum chasing, I think, becomes much more ingrained and pressured that you have to follow it. While we answer to no one, we don't have an annual return that if we go to our investors, they're going to pull money out, and therefore, now you make way less money than you otherwise would have. But even though then, next year you'll be doing great because you're right. It's just, the patience aspect of it. Like you can probably think of several stocks right now, Jesse, in your portfolio that took over a year to play out, correct?
Yeah.
Like they did almost nothing for a while, and then suddenly, boom. Or they looked really bad. Can I shout out one of your stocks that I know you were invested in that did really well? CLS.
Oh,
Okay.
yeah.
Okay.
So what the hell happened there, right? So something abruptly just blew it up to the upside, blow up in a good way. And for quite some time, there was a lot of negativity. Now, this can also be taken to the extreme because we see other examples of this where retail investors get enamored by the story of a stock and they ignore the actual deterioration of the business or the deterioration of the story and fundamentals. So it's like a
it's two-edged sword for sure.
Yeah,
I think it's almost more dangerous than it is beneficial in most cases. Because like, at least in my mind, my mindset is that like I don't care about a stock. I don't know. I don't care about a company necessarily going up or down, like just in general. Like I care about my view of that company being correct. And if my view of that company is correct and I see the opportunity, how do I capitalize on that? Right. I think especially in the retail world and like more like the YouTube retail world, we can like get super attached, or people can get super attached to companies like SoFi, like Upstart, like PayPal. And they're so attached that they're so attached that they will basically just grab onto this company and follow it like, nonstop. They'll over focus on it, right? They'll like ignore other opportunities because of it. And they're so narrow-mindedly focused on this one thing that it really, once you do a decent analysis on a company, like it doesn't take that much time to keep up with it, right? Like you're done. maybe you see like the quarterly updates, news here and there, but like to zero in on a company and just focus on that like there's no tomorrow is just, I think it's very, very bad from an investing and a portfolio management standpoint. Like there's nothing beneficial about that.
At the same time, you gotta love the people that say, "Oh, it must drop by half." Thing proceeds to drop by half. Oh, it must drop by another half. Rinse and repeat.
No, what Jesse said is absolutely true though. Looking at some of the looking at the major holdings of my port, I don't frankly put a magnifying glass to them on a daily, monthly, hardly quarterly basis. I can't say that I'm putting it necessarily magnifying glass. I'm just basically looking at what were the original pillars or reasons for investing. Is any of that broken? Vast majority of the time, it's no. Vast majority of the time now, the fluctuations, for example, on Netflix, up or down, doesn't really. It's if you know what I mean. It doesn't really like affect my mentality anymore. It's nice to see it go up, but I'm saying even if it were to go down off of just like some silliness, it's not really something that even comes to mind. It's much easier, I think, after you've let your winners run, and all of you who are newer to investing, this will happen to you too, that
hopefully
you genuinely change mentality to saying I own a business, and it's very easy to then let the winner run at that point. Like Alphabet, I've never sold a share of Alphabet. I stand true that is one of my greatest investing achievements, because it's the only one I can really point to and say that honestly on the in that has a high allocation, because there's other stocks I've yet to sell, but they're smaller allocations, so it's not.
How long would you say it took you to get to that point where like those type of movements just didn't really affect you? You're just like, okay, whatever.
Some of them, I think, it's a byproduct of the decade that I invested in, because we had such low volatility.
Yeah.
So I was able to get a taste of that. Had I invested, this is always like how we say our life is a product also of luck, timing luck. When I was born, I can't change that when I was born. Could I have been born in a better decade? Sure. but I was born in a pretty good era for humanity and for the United States. Being born not in the United States, but in close proximity and eventually leading me towards the United States. So I had a lot of luck involved with regards to that. It's things that were out of my circle of control. And like for example, if I was born and stayed living in the same country I was born in, my life would be completely different. But the facts are that I am now, I was here at the time I was, and the decade that I started investing was also the decade of extremely low volatility. And you threw a rock at a company and you probably did pretty well. And so that being said, to get to that point, to answer Jesse's question, it didn't take long, because it didn't take long for Alphabet to do really well, or some of the other stocks I invested in to do really well, because it was an era of such low volatility. Everything kind of went up and to the right. The period that I started investing was not the exact bottom of the market, but it was close enough to the bottom of the market after 2008 that there was tons of opportunities. Yeah, the bottom was like 08. Real estate bottom, I was too young to buy real estate. Sue me, bro. Was 2013, which is when I started stock investing. I should have bought real estate.
Yeah, not much pullbacks. Like your first big pullback was probably what, 19 when 20
yeah.
That was the China tariffs, right?
Yeah, December 2018. I remember it.
Yep.
I remember it like yesterday.
Yep. That was probably your first big influx of volatility.
Yep.
Yes. I remember Meta pulled back. That's when I first got my initial dab of Meta, because Meta was a small position. And that was when I got it. I was able to add to Meta. I added to Alphabet. I didn't own Netflix, but I should have. Yeah, go back to 2018. Look at that. Look at that dip down over there. 2018 going into 2019. Yeah, that's that. Oh, I remember those days. It was kind of scary.
I can't believe it got lower than that.
I can't believe it's not butter.
Insane.
You can't zoom in right there, but there was a peak right there in 2018. That big drop, I remember that.
Yep.
That day was
a great day. It was
no, up, more to the left.
Oh.
See that peak right? No, to the left. That peak right there. That day was a huge drop, and now it's like looking back, it's like, oh, that's nothing.
It's like a 15% drop, 20%.
Yeah, and then that looks nothing compared to the drop we saw in 2020.
What right here was like 20. I mean, yeah, we saw Meta go down 20+% on days.
That was a beautiful, beautiful series of days.
Oh my gosh!
Pull up Alphabet. Pull up anyone in 2018. In 2018, that was the first real true vol that you saw, and Meta was one of the bad ones, but Alphabet also. Look right there in that period.
Man.
No, is this like let's show our bags and how proud of them we are time, or
no, it's just like
I mean, you missed like the entire stream, Dan. So like you're stuck with whatever we're doing.
Well, I didn't want to talk about that trash Netflix company.
No, we covered a lot of ground.
More about Alphabet than Netflix, I think.
Yeah, but I think like you got some great opinions though. Like for example, what your thoughts were on analysts.
Well, I recorded a TKO Holdings video. So.
Oh snap! Look who else decides.
We got the whole crew.
What we doing, boys?
Yeah, so two more opinions on analysts. Like we can double back. I think chat doesn't mind. I think
we already did the full thing, but let's do it again. How do you guys feel about analysts?
Are you talking about sell side, or what are you saying?
Sell side, buy side. Talking about analysts, your guys' opinions on
analyst estimates in particular is what I went through.
So so sell side.
Wait, no. I want you to tell me how much you value the opinion of the world's greatest analyst.
Ross Gerber.
Paul?
Come on, guys. There's only one man who has that title.
Peter
the greatest analyst ever? It's me.
I don't know
what you're saying.
Dan knows.
Short NVIDIA.
No, you guys missed it.
The greatest investor ever, or
the guy who called every recession. And...
I know.
Only one person on the entire internet.
Julius JC got it right. JC.
Who holds that claim?
Oh,
I think his analyst on Taste and Women's a little odd. I'll say that much.
Yeah, Foo Hat knows.
Right. I mean, Fabio, we looked at. Yeah.
Okay, Fabio. I just did a video about TKO, but you're on the other side with Netflix. So what do you think of that deal?
That's awesome for Netflix.
Pretty exciting, I think.
Yeah, it's pretty good. I'm very happy to be a Netflix shareholder.
That's a great product for them. I mean, people will pay $15 a month just like for Raw, right? You get 3 hours every week. Like that's $15 a month of content for some people. So
the biggest thing about it is it's live.
Great deal. Yeah, yep. That's a great first live sport for Netflix to go into, I think, because it's a specific time frame, and it's every Monday, right? So it's not like
so you got regular
basketball or whatever where you have to like alter your schedule.
Yeah.
Makes a lot of sense for them.
So
I thought it was going to go to Hulu. That was my guess in September. I thought Disney was going to put it on Hulu.
What content do they get access to specifically?
Just Raw.
For sure.
Not SmackDown's a separate product, which is on Peacock, Comcast. So,
but
they're all separate deals. And then WWE controls their own library, so you don't get that content. I don't think you get that. Well, I doubt it.
Yeah.
But I think you just get the 3 hours of Raw every Monday.
And last I heard, Raw was and has historically been their flagship program out of the WWE side.
Yeah. Where they put their best talent is on Raw, typically, not SmackDown. So, but you don't get, I don't know if you're not going to get pay-per-view. So, but still, I think it's a great deal.
I think so too. Like,
I thought it was going to be on streaming. I thought that's why they were waiting. And that's what they were trying to push for. Cool. So,
yeah, no, what I was really excited to see and what the market, I guess, really took away from it, because I was talking about this in the weekly call today, was the reacceleration of growth in North America in particular. In North America,
the net like quarter over quarter, like almost 2.5 million ads in NA. Wasn't that what it was?
Yeah.
Something.
They know what they were doing. No, you can't tease us like that, Jesse. We already saw
what?
It.
Wait, is it at 157 now?
Yes, it
Hell yeah.
No, it okay.
It was up 3% today. I thought it was down today. What the heck?
No, you got year to date. Yes, year to date. Yeah, you guys year to date.
I was wanting it to go down to the 130s, and then I was like, you know what? I'm building out more. So I bought more this morning.
Yeah, someone in Capital Mindset was like, "Has it run too much?" And I was like, "Run where? Down?"
I was like, shoot, I don't think this is gonna actually break 150 again. I was like, whatever.
Andrew was
I'll nibble a little bit more.
Up 50%.
Yeah, like I was like, oh, when I saw that, I thought it like there was a big announcement and they're up like a bunch today, and I was like, oh yeah, let's go. And I was like,
connecting to the topic we were just having about when Dan was saying, oh, we just pump in our older bags. No. The point was to illustrate how much over time these like small movements look really small in hindsight. Like they look really tiny. That the movement in Alphabet for 2018, that looked like a little.
Yep. When you compare it to,
and then you panic and you sell in that moment, and you're like, oh my god.
Was that off? Off the fine in EU?
No, it was just a broad sell-off at the end of 2018.
Oh,
that was
another taper
broad sell-off tariffs.
Yes, the taper tariffs.
Yeah, tariffs.
There was, I remember after one earnings report, Google sold off, I want to say sometime around that frame, or some point around that time frame, because they had a fine. Maybe that was earlier in 2018. And I was like, this is the stupidest thing ever. And I bought a bunch at that point.
Jesse, highlight that percent drop from there. I just want to see to make the point yet again. What is the peak there on the left to the trough?
Local minimum.
And how it's got to be 40%, I'm guessing. 35%.
35%. And how insignificant.
And if you just held it, then it goes to, I guess it's not that much, 85%, but we'll go to the peak. 230, yeah, whatever.
Winners keep
if
on.
If you stayed and held it till crackhead prices, because I think any of us at this point, I can say confidently that this panel would probably be questioning their holding in Paylocity given the facts we had in 2021. If you held it all the way through,
let's back up.
This is getting kind of crazy.
Let's see. What's the date on that? I just want to see what the multiples were at that point.
September 14th, 2018 was the peak.
Okay, so
of that period.
Yeah.
September 2018, or no, September what?
Yeah, September.
No, I'm talking about the crackhead prices.
Oh, November 2021.
I'll tell you this, and I'm pulling it up right now. So it was trading at a multiple of 222. Andrew's like, yeah, I'd hold it through that.
Trailing or forward?
Trailing. No, like at that time,
okay.
it was trailing. 202.
Don't die on us, Andrew.
Dude, no, sometimes I have those like granola bars and one that gets stuck in your throat.
That's what she said.
Nice stand.
Too easy.
No, but there's so many companies at the time where like even a company I like a lot, CrowdStrike, was traded at like 40 times revenue at around that same time frame.
Price to sales, baby.
The future is now old, man.
43 price to sales.
Andrew's like, yeah, I would have bought it.
No, I was following at that point because I was like, I love this company. I can't wait for them to fall. I was like, die.
Old Andrew yells at cloud.
But no, back to the original question where you asked about analysts.
Yes.
Like sell side?
Sure,
like the people that do like those are the people that like put the estimates out. Like because you're never gonna see a buy side estimate. Or the only time you do is if you see like a specific write-up.
Yes, they're talking about sell side.
Yeah. Because like a buy side analyst, he's as good as his returns, I guess. I don't know. I think sell side's really good to get a deeper understanding of the business if you don't have one already. But like their actual price targets, etc., are pointless. Like they're not dumb. It's just their incentive is not to be making good price targets or to they're not incentivized to do that. They're incentivized to understand a company really well and understand what management's doing and what they're like if you want to get into an industry, how to like understand it better.
They are incentivized to say good morning on an earnings call.
Hey, great quarter, guys.
Yeah. Good luck.
Nice work, guys. So my question
Your
for
father
you,
would be proud.
Good morning, Tim Cook. Good morning.
Hey, did you see, by the way, speaking of just, I just got to put this out there. I got the IWG slides.
Yes.
Oh,
yes, I'm proud of you. Yeah. Like, how long of a wait did it take for you?
I don't know. I had to email Richard back again. He is a useless. Yeah. Richard, if you're listening, you're a useless IR person. I had to email you back twice.
Oh no, Andrew, no.
And he didn't even like say, here you go. It was just a link.
It was just a link.
So sad. Poor Richard.
Could you have found it on your own?
I don't think because like the investor relations website literally says if you want to copy the slides, email this guy. That's literally what it says on their website.
Yes. It's a singular slide, literally. It's like for the presentation.
All right.
Instead of just uploading a presentation.
Tell it to me straight, Andrew.
Mm-hmm.
IWG, IPO when?
So they're officially US dollar is their currency. That's official.
So moon. Okay.
First half of 24, they said they're deciding if they're going to start doing GAAP. I don't know a whole lot of companies that
deciding.
Yeah, I don't know any company that what they're probably trying to do is they don't want to say like by this time we will be using GAAP if the transition takes longer. But I don't know any companies that do their business in US dollars or like denominate in US dollars and don't do GAAP. Hey, give me 1 second. Dog lost a ball and it can't use any of the 50 other ones it has.
Oh, dog is balled so hard. Ball so hard.
Yeah. I mean, because that's like the major catalyst I could think of. Besides, it kicking around and doing as it's doing as a business, it's doing pretty well. It's just not getting attention right now. That was the same thing with CRH, by the way, and we had American counterparts that were an inferior business, good businesses either way, but once CRH got US listed, oh boy. And then as Bacon would say, you have to find companies that
S&P 500 inclusion.
I will say I haven't gone through the slides fully, but I did find one of my new favorite multiple metrics. And on this multiple, they're very undervalued for IWG.
Okay.
Oh no.
All right, I'm going to share my screen. Are you guys ready for this?
No. Yep.
Here,
And
let me
what I
get
say,
it.
Fabio?
S&P 500 inclusion.
That's
Market
it?
cap to TAM.
Oh,
Yes, winner. Good
Oh,
God.
boy.
You had to email for that.
No, there's actually this was their chief development officer, which looks very English. But
Yes.
the ones that were interesting, because they have a bunch. This is the CEO of Worka, and then his was interesting. There's a few that were interesting.
Mhm.
I think this is the one I went through where he said, not that I'm turning this in IWG stream, just FYI.
Can't wait for ICOM.
Yeah, the contribution margin, that growth's nice. But
And Worka.
this is, where are you?
ESG. Very nice.
Yeah, board will make a decision in the first half 2024 regarding the adoption of US GAAP as our accounting standard. Makes it sound like they're going to do it, and then
Is that hieroglyphs?
Yes, those are
Yeah.
hieroglyphs.
My guess is like in the because obviously we're just seeing the slides, we're not listening to the presentation that goes along with the slides. So I'm not sure if he was trying to make like a joke at this point because it's getting towards the end, or what it was. Aliens. But anyways, I would anticipate them to be. I mean, if they go US GAAP this year, maybe I don't know how long of a roadshow they'll do and everything. I don't think their listing in the US should be that difficult.
Instead of saying gap, just say real accounting, and we all get what you mean.
Dude.
You know what? I will tolerate
America.
that presentation far more than WeWork. Like, good God. At least maybe the images somewhat make sense, but
hasn't IWG been actually buying more properties lately though?
No, not buying. Partnering.
I thought they did. I thought they just bought like a decent amount.
Well, because maybe they have, but they're primarily going through a franchise model, like a partnership model.
Oh.
So like if you might see Regis's popping up, and they did buy some distressed WeWork properties.
Yes, that was it.
But
yeah, so they bought some WeWork properties, right?
And that's why I nodded my head.
Well, did they buy the WeWork property, or did they buy the rights to use that property?
I think they bought the property.
They bought the WeWork owned real estate?
I think they bought the rights to do it. Like they took the lease over.
Mm.
They don't own the real estate. They took over like the lease, right?
Maybe, I don't know. Whenever I looked at it, I just assumed they actually bought the property because it was like basically distressed from WeWork.
Yeah.
I mean, if they did that, that'd be pretty interesting.
No, they
didn't occupy crappy properties.
No, well, that's what they were saying was they were moving into WeWork locations and taking them over, basically. But what was I going to say? No, that's what I was going to say. It's like a bunch of like I see online people talking about how I just saw a comment that made me laugh. But people talking online how they want IWG to buy WeWork, and I was like, no, why would you buy the company outright? That's stupid. Just buy their best locations.
Yeah.
Why buy a flaming turd when you can shift through the wreckage and buy what seems appealing?
Yeah. But no,
if I just got the leases, I would be more all right with that. Because I thought they were picking up the property, and I was like, well, shoot, then they're going away from the model that they've been pushing. Like if they're actually buying physical property, If they got the leases at a super distressed rate, then I would.
Can I show you guys one super bullish slide I have on these guys from this presentation?
Was it market cap to TAM?
Yes. No, this right here, it's their US strategy, and just showing like how it's performing. You want to share it?
Oh, sorry. Here.
Yeah. Look at this. Like CapEx going down significantly, signings skyrocketing, revenue skyrocketing, margin going up. That's
stonks. I like the stonk.
I wish I could have actually been there. Oh well. Maybe one day I'll matter.
You'll own half the company one day.
Did we talk about 3M?
Yes.
Paul's lovely stock getting.
Let's do it.
Before we do that, I just want
murder.
Wait. Can we talk about something real quick? Imagine you're Paul. He can't win.
No.
Guy wakes up this morning. Baba's up. I'm gonna have a good day. And 3M reports. It's like even on one day he can't win.
Nvidia's up. I'm gonna have a good day.
Imagine.
Oh wait, I shorted it. Never mind.
Imagine he comes out with a video saying Archer Daniels Midland is a great idea. Like, and
he was
so
proud when he put out his 3M video.
Nailing coffin.
He put the thumbnail, "We're buying this, guys." He put his stupid disclaimer, "Guys, don't just buy it because I bought it." He was like so smug about that 3M investment. And then people realized he did not know about the lawsuits about Forever Chemicals. He did not, because he had to put out another video like 2 months later to talk about the lawsuits after he already bought it. So here it is. The glory of everything money is this investment. Like,
if only his pillars.
This is what you end up doing with his software. You buy value trap garbage. I mean,
what was the actual?
Just like 3M.
Okay, let's actually. What happened with the report? I didn't have time to look at it.
Guidance.
Yeah, weak guidance.
Terrible guidance.
They barely hit their numbers too. So pathetic.
Also, lack of clarity on the progress of the lawsuits.
Yep.
They got settled in one country.
I saw the CEO like briefly talk on CNBC, and his body language was not good.
Oof.
I think he was proud too. Paul's like, they settled their lawsuit, guys. I'm like, the Forever Chemical lawsuits are in like a lot of fucking countries.
Yeah.
You might have settled in one place, but like there's like Denmark, Australia. There's like 10 countries. And
I have a video coming out soon, so shout out to that video whenever it comes out on FMC Corp, because Sven Carlin put out a video on FMC and said that the main risk. Type FMC real quick, Jesse, so people can kind of see the volatility on it. FMC, he said the main risk was the debt. And pull up like a 1 year. Pull up a 5 year.
That's a spicy meatball.
When was this video? Do you have a date?
It was at the bottom pretty much.
Oh, okay.
Because he was basically saying it's down a lot, but it's because the market's worried about. Because, by the way, just for full context, he has a research group where he focuses on companies like FMC Corp. And the other one, Dan, you're going to laugh at this one. Can you guess? Was
the Archer was it ADM?
Yeah,
ADM.
He did.
I commented on that video because.
But you need to know it's in his research platform that he posted research on for that stock as a potential.
Wait, who is this again? Who is the?
This is Sven Carlin, not Joseph Carlson. Oh my god, Sven Carlin.
So Sven does this video on ADM today, and he's like, "Oh, this might be a good investment now that it dropped." And then he talks about the news briefly, and then he starts going to their financials. I'm like, how can you trust their financials right now when there is freaking assumptions that there was some sort of fraud in their financial statements?
Yeah.
How could you even fucking do that? And they're like, it's only a small portion of the business. I'm like, how do you know that's how far it goes?
Dan,
like,
he did the same thing with FMC. That's what my video is about. Like, it's about how he fucked up FMC. And then the follow-up video to this is how he fucked up Archer Daniels. Because, by the way, like, he's, for your audience's context, this is a man charging roughly $400 to $500 a year for the privilege of you seeing his research, and he says he's focusing super hard on these niche companies, kind of like FMC or adjacent businesses. And Archer Daniels Midland, or sorry, FMC, he said the primary risk is the debt, that they have a lot of debt. And he had no mention of the loss of patents. Nothing. That's why the stock is down. The stock is down because the company is losing a patent war in China, in India, and now its markets in Brazil, which is its biggest market by far. The generics are coming in, and the generics are 80% cheaper than FMC's products. So the implication is that margins are going to utterly collapse, and the concern is that they aren't going to be able to stem it past 2026. 2026 is being right around the corner. So if the Brazilian courts seemingly are ruling against FMC Corp in Brazil, because FMC was suing to try to prevent these generics from entering the country. And it looks like they're losing. And because farmers have been like kind of going onto the black market and buying FMC's competitor at 80% cheaper price. So, I mean,
is that why their revenue dropped off so much?
So here's what I would say. It's like, so if the chemicals are 80% cheaper, what they should just focus on, if I was FMC, is just marketing better. And then if people are overpaying for them, it's a free market. So
it's a free market, bro.
Yeah, it's a free market. So like, just let them overpay.
No, that's your prerogative.
I that's why, like, there's certain. I think maybe every industry's like got niche things you have to understand, but like chemicals, commodities, things like this, dude, you have to understand. Like, you can't. These are companies I think you literally can't just look at, like, and I don't think you can do this for any company in it necessarily, but like, you have to understand what the macro is going on with like chemical companies, or what like the larger things that are impacting them are. You can't just be like, oh, cool, they're trading at a PE of 5, and next year they'll like be also at a PE of 5. Like, you like, I feel like that's kind of like the superficial analysis that they do.
Yep.
Because here's I guess, let me put it this way: how long did it take you to find out that information on FMC?
Minutes.
Right.
Less than an hour.
So
that's how bad it is, actually.
That's how bad it is.
So either they don't know, like, one of two things happens: is they're lazy, or they don't know how to do the research.
It's a free market, Andrew, and that is your prerogative.
It is a free market, and that is your prerogative to disagree that his $400 to $500 a year research platform is worth it or not.
Right.
But you are
now you're making me want to watch that video in a live stream after this.
FMC.
No, and comment on the strongman Tanner debate, but
that's different though, right? That's
okay. One thing, just to highlight it again for a public saying, because the first time I say it publicly, it's right here on this podcast. Tanner, the way to defeat Tanner in that debate for strongman, if strongman you were listening, you should have. Well, I already told him this, so I'm like beating a dead horse. You should have cornered him on performance. You should have cornered him on showing performance, because what he's effectively doing is he is now saying, give me money, $350. I will teach you how to 10x, because implicitly I've 10x'd. The implication there, watch the video. He implied he made a 10x on the following stocks: Shopify, Tesla, and Nvidia. That's the implication. That's what he marketed in his marketing video to his course on how to find 10x stocks. Later, correcting and changing his story, which is very typical of someone who's lying. Someone who's lying doesn't follow the same playbook. And this one was very weird because it's so out there, it's so different. He then said it was Canopy Growth Corp, which wasn't originally mentioned in his scripted video, which is, again, one of the things that an alarm bell rang out. He had a scripted video where he mentioned 3 stocks. When he's running off off his own mouth, he says, "On Canopy Growth is the one
I asked him that in his live stream. I said, "What 10x investments have you ever had, Tanner, to sell a course on 10x growth investing?" And then he when he started the fucking weed company all of a sudden.
Boom.
When he was a
Okay,
teenager, he said he bought a weed company and it performed well. And he doesn't know why, because there's no way he knew at 18.
Wait, we're the same age.
Yeah.
Canopy Growth was when he I guess. Yeah, because I consider like adult.
Yeah.
I was like, we were adults when
No, the other one,
adults.
the other one that was also noteworthy was he mentioned Adyen in that debate. Not a single Adyen video was
See, that's where I would have
on that channel.
Strongman doesn't watch. I watched some of his videos because I would have crushed him on that. I'm like, so all of the things you put online performed terribly, but magically all the investments you didn't talk about on YouTube channel, you 10x or did fucking amazing.
Yeah,
because everything he's talked about has done terribly, like on his YouTube channel. All of it. Like I couldn't find anything that made money.
Well, I mean, he basically said that, well, I only make videos on things that I think I'm going to get views on, right? Like,
oh yeah,
like, oh well, I'm not gonna.
Really
nobody would watch that, so I'm not gonna make a video on that. I'm like, dude, like that is the exact opposite. Like,
well,
God.
no, it's exactly if you're trying to monetize YouTube, that is exactly what you do.
Yes. If you're trying to actually make money investing, that's not what you do.
I want to say things on the tools of consequence, but this is not my platform, and that colorful language probably is frowned upon here.
But if Strongman had cornered him on that performance argument and said, because he would say, I don't want people to see me differently. I don't want to see my family members to see me differently. He could have just as easily, or Strongman could have easily countered that point with saying, cool, show percent return. No need to show us the dollar figure return. Show us the percent return. Show us percent allocation.
Fabio, I don't think you understand his point. If you show negative returns, people are going to think you're retarded.
Yeah. I just wanted him to corner him into saying he does not want to show returns, because that's the truth.
Yes.
He doesn't want to show returns because what Andrew said, it is very likely, to what Dan and all of you have said, it is very likely he hasn't made a single dollar on overall on all of his investments. It is very likely he has a negative return. Which then,
and I wouldn't say, if you're just running a YouTube channel, I don't think you have to show you anything. But now you've crossed the threshold.
Yes, you've crossed the line,
and that's where his viewers should understand.
No,
crossing the line into a course is a big deal.
Yeah,
it's a different ball game now. You are paying. People are paying you for financial advice.
Well, and I would even argue. Or go ahead, Fabio. You're going to say something.
No. He's gone worse. He's saying, I'm selling you a course to achieve a 10x return.
Right. Yes,
because I think there's ultimately at the end of the day, I don't really care. Like he's going to do what he's going to do either way. But I think there's just a fundamental difference. If you're saying, hey guys, here's like I would argue he may be. I don't know if he actually is, but there's a chance he's qualified to give a sell side-esque analyst report on SoFi, and saying like, here's a comprehensive understanding of what SoFi is, does, how they operate, etc. That's fine.
The thing that alarms me with him is that he's too dumb to fake returns when it's pretty easy to fake your returns. Like, I think we've all covered the list by now. Multiple portfolios, paper trading account, tweak your entries and exits, blah, 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 blah.
I mean, yeah, but
that concerns me that he's too dumb. Like, he's going to do it eventually. Like,
he's made a terrible decision, because if SoFi is unprofitable this quarter, like he's gonna get wrecked right when he put this course out.
I don't think they'll be unprofitable. They've hit profitability, haven't they?
No, they have not.
No.
Have they guided that they'll be profitable?
They claimed in past quarters that this quarter is their quarter of profitability.
And don't you love
it's only because they assume zero write-offs off of their book. So.
And courtesy of the FT, don't you love how they misuse fair value accounting relative to peers in the space? Because that's fun.
And the thing is about him not being able to fake his returns, like, okay, let's take an example of Jeremy. Jeremy can transfer, but at least he has some equities that he did hit a home run in it. The allocation was nothing compared to his losses.
Yeah.
Granted, because we know this total gain in his public account is 600,000. We're talking hard numbers. Now probably 700,000. But he lost roughly 1 million in Tattooed Chef alone. Okay, we're not including the other investments. So we know that his total returns across portfolios is not positive. It is likely not positive. But he is able to manipulate the returns because he has a Tesla. He has a Meta, right? That he had a much smaller allocation to than his larger allocations. Tanner has yet to have that. He has Shopify at crackhead prices. He's had Skills. Let's not forget, never forget Skills.
Oh, he bought
likely
Skills?
was in void.
Yeah.
Yes, that guy.
Oh,
that
he
guy
bought
was
big time Skills. Yeah.
Yes. Went into debt. That video is saved. We went into
Oh,
debt.
you're talking about Tanner. Okay.
Yes. Yes. Oh yeah. No, Tanner. He Shopify already mentioned. I don't know if he was in Voyager, but he strikes me as a person who loves fintech. Probably was in Voyager. Maybe didn't make a video about it, but was likely in Voyager. And I mean, on and on down the list. And, PayPal is a recent one where he started with PayPal a little bit on the upper side, and now he's holding it. But PayPal, like I told Jeremy when Jeremy was trolling me in my comment section, you can pick worse. There's definitely way worse.
PayPal's, like I said, it's not a zero. It's just.
Yes, you could definitely do worse than PayPal.
The thing, though, about PayPal is I don't know why all of YouTube that's in it, they're fundamentally growth investors. So it's like they buy the Teslas, whatever. And then they buy PayPal, and all of them say the same thing. PayPal's undervalued, and I'm going to sell it when it's 100. It's like, it sounds like you don't even like the stock. Like, your argument is just like, it's cheap. And then you compare it to Visa and MasterCard.
Oh, well, actually.
If you want to compare PayPal to something, compare it to a gas company because they have the same terminal value. Like, I mean, that's more accurate than freaking Visa and MasterCard.
Yeah.
Oh, yeah.
No, man, you got to invest in a deteriorating checkout button. That's what you're going to do.
But anyway, sorry. What were you going to say, Fabio?
No, just that. Yeah, like the PayPal story now is surviving for a period of time and just returning enough capital to shareholders over that period of time, and that's it. But yeah, like I said, he could do worse than PayPal. That's all I told him when he was trolling me in the comments back in the day. And he kept saying like, "Oh, I still have his comments saved because he hasn't deleted them in his troll account." But I have him say where he's like, "Oh, look at you not talking about PayPal before their amazing earnings. Earnings happen. It's like stock didn't do anything." It's like, wow, he talks so much shit,
especially when he's high.
Yeah,
you probably was high.
Watch PayPal like just stay stagnant for years, go through like multiple compression, and then turn into potentially a buyback story, and everybody gets out of it.
The argument right now is,
and then we get into it.
The argument right now is that it is a buyback story. I think.
What was that?
I think the argument right now is that it is a buyback story.
I don't think it's there yet.
No,
but that's the argument by people.
Well, they might argue that. I don't think.
I haven't looked
like financially, like quant wise, that it's there that yet.
Good old.
I was looking at the other day. It's not. I mean, maybe.
Anyone opposed to my claim that Jeremy Lefebvre is a poor man's meat coven?
Yeah.
Of course. No, you oppose that or support?
No, I don't oppose it.
Okay.
I mean, if you look at like their YouTube trajectories and like what they were doing during the peak Euphoria season, it makes complete sense. But
well, I mean, it's one part that another part like dye your hair. Oh, okay, I'll dye my hair. Oh, you've launched an ETF. Well, I want to launch a hedge fund.
and I know someone else is going to like point out someone that has one, but I don't know a white person with a more confusing last name.
All part of his strategy.
Yeah.
You can't call him out.
I mean, it's I'm assuming it's French, right? Lefebvre.
Could
like it doesn't look like a French name. I don't know. I'm not saying like I'm sure that's his real last name. Just a
Damn
complete sigh.
Frenchies.
Hey, watch your mouth.
Doggo is
But-
going ham.
You can't
In
tell by my nose, I'm
conclusion,
French.
if a debate ever were to continue again with Tanner, it's as easy as cornering him into a corner, saying, "Show your percent returns."
Oh, he invited him back in 6 months.
Yeah, and he also would insist. But Fabio, my course isn't about portfolio management. That's your prerogative, and it's a free market.
So
You
Tanner,
copy
if you're
it,
watching
please,
this, you
Tom.
have 6 months to fake your accounts.
All right, I'm going live after on this.
I wish I wasn't working, but at the same time, I doubt Tanner would. These people never want to invite me on or debate me. Like Tom Nash ditched me. I was really sad by that.
That's because he's a
It
coward.
is sad.
Wait, what is Tom Nash doing nowadays?
Geopolitics.
Oh, that's what he
The
did?
other layup gimme where you can be a talking head.
That is if you can be one of those talking news head people.
Yeah.
Great friggin' business to be in. Like,
Yeah.
you just give the news out. 10-minute video out.
Macro, finance, and geopolitics. There you go.
So it looks like he's a Tesla Palantir geopolitics for the most part.
Mhm.
Yeah.
Oh, Tesla's tomorrow, right?
Yep.
Tesla is.
Let's
Okay,
go.
let's
You gotta
trash-
live stream tomorrow, man.
let's trash Tesla a little bit.
You want me to? Should I short it? Well, hey, Jesse and me are doing some short-term clownery. I don't know if we want to talk about it, but
No.
maybe not.
What are you and Jesse doing?
I mean, you got Andrew's doing it too.
Oh, you are? Okay. Well,
Wait.
we have some short-term,
Oh, you
Wait.
bought some too?
Sentiment.
not the one you guys are doing. Not a different one, but
Oh, that's right. Okay, I saw that. It's
it's fun to have fun. Like, we're not going.
as long as
It's
you
fun
know
to
you're
have
just having
fun.
It's fun to have fun.
I still have my PayPal calls.
I read
Like
a decision
Oh,
by
really?
a judge on a certain issue, and I didn't think it would hold up, so I made some predictions.
Oh, okay. I know what you're talking about. I know.
I think it'll go through anyway. But
I'm
plus, there's a
okay.
cash value to the certain things they're buying that I felt the stock was.
Hey,
risk-free.
vacuums also have a cash value, I think.
I know what you're talking about. Also, God.
Listen, the Europeans will die on that hill about your stupid vacuums. This is too far. None shall pass.
We draw a line here, Andrew.
Somebody in that meeting must have stood up and they just sipped on their champagne and they're like, "This is our stand, guys. This is where we fight Amazon.
Like, this is
No
our
further
Pokemon.
will we go."
That they're talking about merger risk arbitrage. Well, technically acquisition risk arbitrage, but
No,
remember-
it's lotto ticket.
I remember people.
That's what it is.
When the Activision Microsoft deal first was announced, there were
Yep.
so many people on Reddit that went, "Why would you not put all your money in this?" Because Activision's like 72 and the deal was at 95. So there were so many comments of people like, "Well, why aren't you all just putting all your money in this? It's free money because it's obviously 20-30% upside." And then people would be like, "You'll see, you'll find out why." There's a reason
All
why
right.
these things are not dollar
So-
for dollar.
Yep.
I'm glad you brought that up. Because I feel like a good amount of people played the Activision Blizzard Microsoft merger arbitrage, right? Yeah, Fabio, right?
Well, I
did.
didn't. I owned it before.
exactly. Okay.
Yeah,
I'm
and I just
getting
kept
there.
it.
I am getting there. All right. So yeah, I felt like I saw. I felt like I saw like after that, like people like it worked, right? And people got this this false confidence of like, oh, well, you can just like merger arbitrage stuff. And then you've got like iRobot, right? And I played that a couple times here and there, right? Like, okay, cool. But there is a big difference between an iRobot type of company, merger arbitrage between iRobot and Amazon versus an Activision Blizzard type of company to Microsoft,
details.
right?
Massive details.
There is no way in hell I would hold iRobot as an individual, like flat out company at all.
No.
And like, so your risk profiles are like totally different. Because if iRobot does not get that deal done with Amazon, they're effed. Like they're effed.
If you want a quick form of entertainment, this is a meme I posted back when I went long Activision.
Yeah, it was funny because like I did something kind of silly. At the time, it was Black Knight and Ice. Like there were different times, moments of time where I'm like, you know what, attractive enough, where I entered in both, and it was one of those cases where both worked out all right.
I think the best merger plays are when you're just buying a solid company because it's a solid company and you would want to own that company regardless. And then like, I don't know, it's happened to you, Dan, probably several times where you buy something because you like it, it's solid, and then it goes through acquisition, right? And then you're like, okay, well, I'm out, right? And you didn't necessarily want that to happen, right? But
it keeps happening to me.
It keeps happening to you, right?
I don't want, whenever I get an acquisition and they offer stock, I bail. I don't want to own your shitty company. Like, I don't want any sort of, when they go, we'll give you like 0.5 shares per whatever. I'm like, no.
Yeah.
Not interested.
I'm hoping that doesn't happen to Humana.
Oh, Humana. Yeah, that's another one.
Travel
but that's another
centers
example of like,
for me. I could have owned the truck stop. I was so mad.
Travel centers, Triton. What were the other ones, Dan?
The window company I wanted.
Oh yeah.
That one pissed me off. I thought that was going to be an awesome investment because you had climate change, like the home improvements in real estate. Fucking bought it. So
the iRobot one really scared me, because just looking at the company, I would never want to hold it long term.
That's why I thought no one would block this. It's like, why would you block this dying company that needs a bridge loan just to get there?
Okay, now that we're actually going into this, that is kind of my thesis on the other side.
Yeah,
that like if they don't get an acquisition, they're dead. They're done. And I don't like if the EU actually does block this, they're giving them a death sentence. Like I think that iRobot's going to be like, hey guys, you know what? If this happens, we're going to go BK. And we're going to be out.
What happens if iRobot simply stops or ceases doing business in the EU? Is this possible? I'm not a lawyer, but if they stop doing business in the EU and they say we're not selling robot vacuum cleaners in the European Union, can they just go off of the American decision? Because we're just saying, we're not doing business in the EU anymore. What does the EU have anything to say with an exclusively American business?
Let me look at their results and see how exposed they are to Europe. Let's see.
And then I know that Amazon doesn't care about the robots.
Wait, what?
I don't think Amazon even responded.
What do you think is the percentage of revenue iRobot gets from Europe?
Probably single digits.
8%
or single digits.
Yeah, 5%.
1%.
Oh, I was gonna say 2.
Okay, why do we care about what the European Union says about this?
Wait, why does the European Union care? Oh, you know those guys.
Why don't they just cease operation everywhere? Because Amazon literally just wants the data, right? I also have a feeling that Amazon just doesn't care because if they do go BK, then Amazon's just gonna buy the IP.
That's what I was thinking too. I'm like,
they're gonna get what they want either way. But
I don't think Amazon even responded to the EU's request for more information. I think they just didn't even respond. They're just like, we're done.
Maybe Amazon is lobbying the EU regulators saying,
Amazon's like, I just did the math.
Kill it.
5,000 of these things were sold.
Actually, let me tell you, that's very possible because let me just tell you the power of LVMH. You know what Arnaud did to Tiffany's, right?
Deliberately had it die.
Okay, no. This is like outright corruption from a European governmental body. So effectively, what basically happened is he ended up regretting what the price that they agreed upon was, and then so the Tiffany's was like, no, you have to buy us for that. You agreed to that, and then what ended up happening was the French, I think it was a French authority, blocked the deal. And and then they redid a deal, and for whatever reason, I gotta find the story because they didn't accuse, no one accused anyone of anything, but I was like, that's really convenient. That's hilariously convenient.
Yeah.
They got a new agreement passed, and then that one went through.
Well, let's see. Amazon and iRobot already renegotiated once, right?
Let me find it.
They got that bridge loan, and the purchase price went from 61 a share to 51 a share.
But to be fair, I mean, the net amount they're paying is the same. It's just they're factoring in the bridge loan.
Yeah, the debt.
Mhm.
They should just like freaking stop, like shut it all down. But man, okay, I gotta wrap up here. It was good. I'm glad you guys came on. Do you guys have any final comments?
Well, we're going to talk about Paylocity, so I'll just say it hasn't run up too much to buy it.
Dan has a live stream. Dan wins your live stream? Question mark.
Maybe. Think about it.
They report Paylocity reports in February, right?
I think so. Yeah.
I mean, I hope they'd like.
Oh my God! Right here.
Let's
Sorry,
get
I just found
crushed. Let's get
you found
crushed.
it. It was the French's foreign ministry. French foreign ministry stepped in and said LVMH should delay the deal to take part in the country's efforts to defend itself and its national interests.
Wow,
that was the excuse they gave.
That is why, like I wasn't necessarily joking when I said lobbying the regulators. I wonder who would stand to gain.
Hey, why do you think Boeing's headquarters is in DC now?
Yeah.
Right.
Yep.
Oh my God.
Yep.
See, I'm all for government regulation as long as I have a say.
Yeah. As long as it benefits you, right?
Yeah.
It's a free market.
It's fine. It's a free market. You just gotta have enough money. All right. We will catch you guys in the next one. Have a good day. Have a good week. Later.
See you guys.